But look, the stock of the day, I just think we can't get away from this broader macroeconomic theme. We saw interest rates rise here yet again on Tuesday, the banks passing them along. Consumer discretionary companies continue to downgrade, and we've got the brokers weighing in as well. Our stock of the day is Premier Investments. So everybody says best-in-class retailer, but Goldman Sachs today says that Premier Investments appears to be the discretionary retailer most at risk from stagnating top-line growth and deteriorating macro conditions. So it's actually cut it to a sell from neutral. It says Premier has the highest gross profit margin and is therefore most sensitive to lease and wage cost pressures. Goldman Sachs does acknowledge that their forecasts across the sector are more pessimistic than those being held by many other analysts, but it's cut its target price by 17% to $21 on those lower earnings per share forecasts, and Premier is one of the worst performers of the session so far. And look, I'm not sort of pitting experts against each other, but I hosted this program on Tuesday, and it just really stuck out to me that my guests at the time called Premier at these levels, a screaming buy. Clearly, Goldman Sachs disagree. So I know that we've done retailers a lot, but guys, I just can't help but think that this is one of the more fascinating areas of the market, and this it's a big call from Goldman Sachs when it comes to Premier.
I don't know who's calling it screaming buy. It must be a chartist.
No.
Because it's been sold off quite heavily, but there's
but
potential for more.
Yeah, but saying that, if you're a long-term investor, that it's really cheap at these levels. Well, cheaper today, than Tuesday.
There's arguments for that, but we're going into an environment where discretionary spending is going to be slashed pretty heavily, I think, particularly when we talk about, some people's interest or mortgage repayments going up by sort of $40,000 to $50,000 per year extra. You're going to find discretionary spending is going to be slashed, and this is a type of discretionary spending that can be sort of cut back on households. Where, Bubs, the baby retailer. Sorry, they don't retail babies, but baby products. They cut back their forecasts and guidance the other day, and they got hammered.
Absolutely hammered.
Yeah, there's elements of Bubs, I think, that are probably less discretionary than what's in Premier. You're talking jeans and clothing and things like that, which
pajamas.
Pajamas, and they've got that stationery. The name
Smiggles. You don't have kids have outgrown it clearly. This I walk past a store every day, going from the station to the office, and that store's gone. So I struggle to see them sort of picking things up in the next 12 to 18 months. So yes, I look, they are good retailers, and ultimately longer term, there's probably better things on the horizon for them. But I think there's probably a little bit more pain before any positive turnaround for them. So you would be selling?
We downgraded recently to a light, and so basically.
Ken?
This is a tricky one because I think everyone might be right there. Like the guest you had on probably is a good long-term buy, but there could be some more short-term pain. You might be able to get it cheaper because I think if you look at like Adairs, Baby Bunting, some
Universal
of these other
stores.
Universal Store, like those share prices had already been hit hard before they downgraded, and then they got smashed. So the argument is that the market's already priced it in, that wasn't right with those other ones, and if Premier does downgrade, it won't be right with Premier either. I think Smiggle, which is the crown jewel in Premier Investments, is under like that. You would be worried, I reckon, because when you think about Smiggle, the demographic is young families because it's little kids.
Yeah, and look, the stuff isn't cheap.
It's not cheap, and young families are the ones who I'll guarantee you are at the that tipping point with mortgage costs. And everything else seems to be getting more expensive. So maybe buying a $30 drink bottle is
or pens. You can go to the dollar store and get ones.
Yeah, or Kmart or
brighter colored as well.
Yeah.
So interesting. I just find that the share price reaction to some of these downgrades have been pretty instructive as well, because if you're an Adairs shareholder, like you would have known that there's a slowdown in retail, you would have known that people kitted out their homes, heavily in COVID. The pandemic, in the COVID pandemic. So what you're saying, guys, then is don't be afraid to sell these retailers, because even though a downgrade hasn't come yet, the writing might be on the wall. So you think about Harvey Norman, you think about all of those sort of retailers.
Even the quality retailer, like JB Hi-Fi, we had in our portfolios for a long time. We recently took them out, and they've been great, and they probably continue for a little while longer. But a lot of people spent money on upgrading their computers and their gaming consoles and their TVs during the pandemic because they were stuck at home, and also the businesses that were. Or people working from home upgraded computers and so forth. So all that spending's brought forward then. So you don't need to upgrade that stuff for 3 to 5 years.
What do you think about migrants coming to the country and the rate of immigration? Because that was one point that was brought up with JB Hi-Fi, that might help buffer its earnings.
It will help. And I also think, like, we're all talking about mortgages. The reality is 1 in 3 Australians have a mortgage, and 1 in 3 of those 1 in 3 have a fixed mortgage. So yeah, there is a mortgage cliff, but it's not like everyone is going to be affected by that. But it does feel like that every retailer is different, because I think a lot of retailers had this pull through during COVID of demand, and Francesco's right. Like you are probably going to look at it and go, I don't need to spend money on that now if I'm worrying.
In this environment, people aren't sort of, even those that don't have the heavy mortgage burdens, a lot of people are not then turning over their homes, so they're not moving from one to another, which is when they trigger to buy new white goods and the new furniture.
Well,
exactly. So that doesn't happen. And the immigration, yes, it does improve things for them, but I don't think it outweighs what they're facing over the next 12 to 18 months.
So again, just to push a point, if you're an investor and you've got exposure to retail in your portfolio right now, you'd be taking a long, hard look.
Very long, hard look. Yes.
Yep, I agree. Yeah.
Okay. All right, so that's the sell. I'm going to call that a sell. Premier Investments. Okay.